New Zealand's tech podcast, the voice of the tech community. Proudly supported by Umbrella Connect.
Cool. So welcome to the podcast today. And we're just going to go around the room and introduce who we are, maybe to start with. So my name is Darcy Ongaro. I'm with the NZ Everyday Investor podcast. And Paul Spain.
Paul Spain, host of New Zealand Tech Podcast and Chief Executive at Gorilla Technology.
Cool.
Adam Dodds, Managing Director of Techament.
Cool.
And Paul Quickenden, Chief Revenue Officer of Techame.
Nice. All right. And so today we're going to be talking about stablecoins. What the heck are they? What are they used for? All that sort of fun stuff. But before we go there, a little bit of a baseline understanding for those who are just kind of new to this whole crypto sphere space. What is cryptocurrency, right? So I'll give a real simple explanation, and then I'm going to ask one of you guys a question as to what a stablecoin is. So for the benefit of those who are just kind of getting up to speed here, cryptocurrency, digital money for the digital world. Nothing new. We've kind of been acting with or using digital money for a long time, just with how we use money these days. But increasingly, there are new digital rails being built for a digital world, which is being developed. And that creates with it all sorts of new words, all sorts of new concepts, and things like stablecoins, which is what we're going to be talking about today. So perhaps, Adam, if you could start just by maybe defining, or actually Paul, I can't remember who we decided. Yeah, Adam, what is a stablecoin?
So a stablecoin is effectively a digital cryptocurrency that is ultimately pegged to a fiat or a currency of some nationality. So you can have stablecoins for US dollar, Australian dollar, euro, New Zealand dollar. And that's what we do. We have a NZDs, which is a New Zealand dollar stablecoin. What happens is you know that in a trust-based position, if you represent a $2 NZDs, you know that it's worth $2. And what we're trying to do is effectively create a greater efficiency in the way in which value is exchanged in this type of new world we're heading towards.
Okay, so it kind of creates a bit of a bridge between this new digital world, which is a little bit scary, all these new tokens and cryptocurrencies. But hey, this is familiar. It's New Zealand dollar. Oh, I get it. Yep. And it truly is backed by, so 1 foot in the digital realm, 1 foot in the analog realm. They talk to each other. So all the comfort and trust that you have in the New Zealand dollar, you can see it in the digital realm.
Yeah, absolutely. So when you look at most stable coins that have some sort of validity globally, they're the ones that say that they're 100% collateralized, which means sitting in a bank somewhere, there's a dollar representative of this minted New Zealand dollar stable coin. Okay. Once you've got that level of trust, then the way in which people exchange has been something we've been doing for hundreds of years.
Yeah. Okay.
I'm interested in this idea of it being as that you could trust it as much as you can trust the traditional currency, because we sort of often hear about things that this is sort of super trustworthy and so on, and then then something happens. What are the mechanisms that that you put in place so that people would have confidence in the NZDs stablecoin? And what sort of regulatory approval have you had to go through? What have you had to, prove locally to be able to do this?
Okay. Well, it's been about a 7 to 8 month journey to get ourselves to where we're at today. The first thing to do is sit down with your lawyers and sit down with your professional services providers and go into the detail of how you could actually architecture this relative to jurisdictional requirements. Once you have that, you get given an opinion and you get given a bunch of terms and conditions that are compliant with New Zealand law. New Zealand's actually really good from a cryptocurrency perspective. We're reasonably clean on what you can and can't do and what's security and what's not a security. Once you do that, you then start moving into the technology that underpins it. And you start looking for, well, how do you make sure that it's audited well such that when people see that something is minted, it can be well controlled throughout the entire process of minting through to redemption. After that, you start moving into the bits that probably cost a bit of money, and that is getting external independent advice that you're actually operating in the right way. So we behave well. We have our own treasury policies. We engage with one of the big four in terms of prof services providers, and they look at our books. They make sure for every dollar, there's a dollar. And might sort of sound, I make it sound easy, but the reality of it is everybody has to play ball. You look at everybody inside the company, you look at the roles and responsibilities that they have, you look at the behaviours and the way in which you communicate. And if you can tick all of those boxes, then ultimately you reach a level of trust.
Okay.
We're added to from a value point of view because New Zealand dollar globally in the top 10 traded currencies is trusted. So we halo a bit into that as well.
How does it work then? So talk me through how the connection between, you were mentioning that phrase, minting a stable, an NZDs.
Mm-hmm.
So when that gets minted and there's something that's backing it one-to-one, can you explain to me that process mechanically? Like what's actually happening behind the scenes?
Let's pretend I'm a customer, and so Adam's business deals with people who are wholesale accredited investors, so people who are a little bit more wealthy than your retail investors. So I turn up and I say, hey Adam, I've got a chunk of cash that I want to digitise, $100,000 or something like that. Adam then goes through a journey of making sure that all of the same sort of things that your bank has to do around know your customer and where has the money come from, and it's not being laundered and all that sort of stuff. All of those checks have to happen on me.
Yeah.
I provide my passport and proof of address and proof of wealth. And once that's happened, then I deposit my fiat currency, my New Zealand dollars, into Adam's bank account. And then sitting behind that is a function where we have this thing called a Multi-Sig Wallet. So multiple parties have to sign, like put in their private keys to sign the transaction, and that would enable the release of 100,000 New Zealand dollar stablecoins.
Right.
Then that gets issued to me and put into my wallet.
Right.
And that's kind of the process from there.
Where does that $100,000 go? Like, where do you put that money, Adam?
Okay, so and this is the financial model for Tekament. We receive that money. We put that money into cash and cash equivalent investments, so think long-term deposits or government bonds, noting that we need to make sure that the cash is available if people want to redeem, and the returns that happen as a result of that being sort of put aside goes into the way in which we run the business.
Right.
So, interest rates are relatively low at the moment, so effectively we need lots and lots and lots of money to really sort of kick things over. But it makes it a clean proposition. We are effectively holding money on trust. We're not holding it to give returns, and therefore it means that we have access to the pool of benefit.
Got it. Okay. And then these digital tokens that get issued, how does that work? Like, what is it built on? Ethereum network, presumably, or?
Yeah. So when we were doing the design work, in that 7 to 8 months, we looked at who had successfully launched stablecoins that hadn't been hacked and all that sort of stuff, because some of them, as you say, there's been some failures out there. We chose a very prominent piece of code from a consortium that had successfully launched the number 2 base US stablecoin called USDC. Okay. That comes from the Circle consortium, and they have effectively open sourced that code because they want more adoption of that code, and so we use that, and then it goes through, even when we built it, it gets audited by professional cryptographers to look for any issues, bugs effectively. It is built on the Ethereum network. We have discussions going on with various parties around spanning other networks. They're quite interested in launching stablecoins on other platforms or protocols or whatever language you want to wrap around that. So it's an Ethereum coin, so I can put it in my Ethereum wallet and move it around on the Ethereum network.
Yeah, because that was my next question, is that you've given them $100,000, you've minted $100,000 worth of NZDs, and then you now are in receipt of this in a wallet of some sort.
On the bank.
Yeah, you are your own bank.
Yep.
Which is pretty interesting.
Yeah.
That's phenomenally interesting, actually.
Yep.
But this is basically just going to show up in your wallet, but not all wallets, or all wallets?
Any wallet that supports Ethereum.
Okay.
Yeah. So, and there's there's
a gazillion.
There's quite a few of those.
In my Exodus wallet, for example.
I don't know about Exodus.
Right.
I don't know if they support Ethereum, I'll be honest. But you can do online stuff like MetaMask. You can use the hardware wallet, which I would recommend.
Yeah.
Which
for
would be
$100,000.
a Trezor or a Ledger or something along those, and those have got interfaces into the Ethereum network or can support it. That sort of stuff. Yeah.
That's cool.
Now, I think the thing that people will be interested in is, what's in it for me? What's the benefit? And certainly for anyone that has to pay bills across borders, one currency to another, and those types of scenarios, or even if, I think of even travelling, not that we do much of that these days, with cash, the amount of hit that you take, and I remember, especially if you're on some sort of big, globe-trotting journey, every time you sort of changing your money one currency to another, you sort of wonder, wow, this started as this much money, I've only spent that much, but I've got a whole lot less. How do you see really the role of the stablecoin and cryptocurrency sort of changing how we transact internationally? How does that sort of fit together, and what do you see as really the big and interesting use cases?
So we go through personas is probably the key way to start this. I'm somebody in a country that's currently got a lot of volatility. I'm being paid in my local currency, but I know that when I go to work on Monday, it's worth potentially 75% of what it's worth today. We find that people are really interested in potentially having a piece of New Zealand dollar because we're a very stable currency, we're commodity backed, a bunch of other things. So people will naturally try and figure out how it is that they can hold that, being their own bank. So that's number one. Number two is the efficiency in the way in which you can pass value. You talked about travel before, but there are still a whole bunch of people who are sitting out there in the UK. Some of them have actually needed a bit of help. The ability to take some NZDs, send it over the chain to the kids who are in London, and they have it instantly, and they'll be able to exchange it over there without actually the issues of potentially a 2 to 3 day turnaround time when it comes to traditional currency. On top of that, you have the persona of people who are crypto enthusiasts. Now, the market's a bit volatile, it goes up, goes down. People want to get out of the market from time to time, and when they want to get out of the market, they don't necessarily want to come back to fiat. They'd rather stay in something that they know, enjoy, and trust, i.e. they are happy being their own bank, so they'll sell down their Bitcoin or their Ethereum, and they'll just keep NZDs in their wallet. Then you have remittances, where businesses can potentially pay for things and resolve them either within the country or across borders. And then you go into another layer, which is within the country itself. People are really interested in passing value to each other, be it at events or tickets or what have you. And you can sort of see there's levels of efficiency using a digital stablecoin to do that, because people aren't carrying around wads of cash. They're not necessarily carrying around credit cards. They're able to do it via their wallet, via their phone. So it's a really interesting place to be. And if I may, just for a little bit more, it's not our job to really tell the market how to use this. What our job is to provide an underlying trust proposition and then let people become creative from there.
Yeah, and I think that it's always one of the exciting things with new technologies is what actually people come up with. And I remember having seen this, watching in New Zealand where government made an incredible investment into the future of our broadband with fibre around the country. And in those early days, people asking the questions, what are we going to use this for? People are asking the same questions around 5G, and I think similar sorts of things around crypto. Is the whole picture's not entirely clear, but it does seem very much, which we're moving in this particular direction as a world that is very much digital, very much around technology, and things that were the norm. Even the norm today won't necessarily be the norm when we look sort of 5-10 years out, and sometimes they move very quickly too, right?
That's what I think is so fascinating about this space, is that we're touching new tools. You guys are creating some of them, but we don't really know exactly all that they're going to do, which kind of creates it's the prerequisite required to foster innovation, right? Like if you're building with new tools, you start to discover, I didn't realize it did this thing. But going back to what you were saying before, Adam, in terms of some of the use cases, I'm thinking in terms of people who are maybe managing their own portfolio of crypto assets, and they are trying to keep some sort of ratio in terms of what they're holding in a very volatile up and down market. Instead of exiting if they wanted to keep 20% in cash, for example, for rebalancing or whatever, it's a little bit of a frictional frictional. I don't know if that's the right word. There's a lot of friction involved in getting that out. There's a lot of fees involved getting that back out into your fiat currency. It takes time. So what you're saying, though, is that you could just have your NZDs as one of the cryptocurrencies that you would trade into in those situations. Is that right?
Yep, absolutely. And there are examples throughout New Zealand at the moment where people are not exiting crypto, i.e. they're keeping NZDs or BTC or ETH, and they're taking loans against that to be able to operate in the traditional fiat world.
Talk me through that.
Well, it's people who are long on cryptocurrencies. They believe they've got a lot further to go. They understand that there's some financial structures in place for people to be able to obtain those loans, and they have to do it obviously with full knowledge of risk. But equally, they recognise that their interaction with the fiat world is quite small. So therefore they don't need to be shifting big monies around, or they don't actually need to have lots of money sitting in a bank account, because ultimately money sitting in a bank account at the moment is quite inefficient and could be even more inefficient if we head to negative interest rates.
So I have $10,000 worth of Bitcoin, for example. I borrow, say, 50% against that in NZDs. I convert that to fiat if I wanted to buy a car, or I take that NZDs and I could then do other fancy stuff with other cryptocurrencies, right?
Correct.
Yeah.
And so that other fancy stuff is kind of under this umbrella term called DeFi, decentralized finance. Yeah. And someone in traditional finance will look at that and see some parallels, like there's lending and there's
lending, insurance
and all sorts of stuff. But it's just being done in a crypto flavor, using smart contracts and that sort of stuff. And so, the option is there for people to park a stable coin in something like, I don't know, Curve or Wi-Fi or Enzon.finance, which is a kind of a lending institution, and
Celsius and
someone I found Celsius, a fund manager or a smart contract in Celsius's case will execute, and you get a return on whatever you parked. And the returns currently in DeFi are miles ahead of what people are seeing in the traditional finance world. And so to Adam's example, why would I park it in a bank? Even if I wanted stability, I can get a much greater return. I'm talking about a persona that's a crypto native, and they go, I'll just do that. I'll just park it there and get much greater returns.
Because an example of this could be, just from my limited experience with this myself, let's say I bought some Tether, which is effectively a stable coin, but it's backed by US dollars. And I could put it on one of these lending platforms like Celsius, and now I'm getting a rate of return off that, like a traditional bank account used to be. But I could almost, in some cases, engage in a form of arbitrage where I'm borrowing at a really low rate, secured against my mortgage, plonk it into this, and you're actually getting a better rate of return. Not financial advice. Don't do this, people.
Couldn't get a comment, but we think some people are doing that. And that does create, let's be candid, it does create some sort of systemic risk, because you are leveraging up to do that. Correct. And but we do know of people that are seeing that interest rates are at, what are they, at 2.5% to 3% in New Zealand. They're seeing 8% returns per month in some DeFi platforms. And is that sustainable?
Probably not.
Probably not. But it becomes,
is that safe?
So it becomes where your risk profile is. And so the people that we know, and we know a lot of people in crypto, they won't put 100% of their wealth into a single DeFi platform. They wouldn't do that.
Correct.
We talk about if everyone put 1% of their wealth into crypto, that would be great, and then you would put 10, 15, whatever your risk appetite number is, into a DeFi thing,
correct,
and get a return off of that.
Correct.
That would
it's
be
like diversification on every single layer that you can imagine, right?
Correct.
Yeah.
And the reason for that, there could be a number of reasons why you wouldn't want to put all your eggs in one basket. A flood in the traditional finance world takes away your house. Whereas a flood in crypto might be a flash loan or a hack or whatever it is, and so those risks are there.
Okay. How does the peg work, right? Because I'm thinking traditionally, like even just with the US dollar in the early 70s, where it was the peg between the US dollar and gold was broken. What are some of the dynamics at play when crypto markets kind of inevitably go up and go down? are there risks where that peg could be broken because of a flood of new fiat currency coming in or going out? Like, how durable is the connection between the digital and the analog here?
So,
Great question.
reasonably durable, I'll say. What we've done is we stabilised the peg on a exchange called DASIT, which is a New Zealand-based exchange. On there, we put up buy walls and sell walls, and the buy walls are an example that if at some stage or another the price goes to 99 or 98 or 97 cents in order to buy one NZD, then we'll be buying that all day long. Then if it goes to $1, $2, we'll be selling as much as we possibly can. And what that does is it creates a nice little pressure about $1. When you look at the history of stablecoins, for the first 6 months you see a bunch of volatility. And that's always while people are getting a good handle on their processes, they're getting a good handle on, I suppose, how the market is growing. So we are into probably month 3. We're not going pervasively everywhere. We're keeping it nice and static in terms of a single place. And once you can sort of see that trust and you build up those walls and you have sufficient money on either side, you can actually deal with people coming in or wanting to get out as quickly as we can.
So the market's got to grow for
Yep.
the volatility to kind of chill out a little bit, and you
Yeah,
guys just
absolutely.
kind of slowly scaling in.
It's a
Yep.
liquidity thing
Yeah,
on
yeah.
both sides, on
Yeah.
the buy and the sell. Right, the more demand on each side, the more even it will be.
Right.
Effectively, how that works.
It's a fascinating parallel as well between, because you are your own bank as a holder of NZDs. You're your own bank, but then I guess you guys are acting kind of like a central bank, aren't you? Is that a fair
To a
analogy?
certain degree, we're acting more. We're acting more like a trust.
Yeah.
Really. And there are parties that are looking to take on banking licenses to move into this space. But from our perspective, really, we're just a functional engineering business that has
Sure.
a risk profile that's quite contained. We mint it, we keep it about $1. Where the exciting stuff starts to happen is when we start to create pairs of New Zealand dollar stablecoin with USDC, which was another USD stablecoin with Ethereum and with Bitcoin. When we start doing that sort of thing, we can actually run a parallel world. So if you consider today, there are pairs of NZD to BTC, ETH, and to USDC.
Yeah.
So there's an NZDs side to it. And when you find that there's small anomalies between them, the old world to new world, or
Yeah.
semi-old world to new world,
Yeah.
you can take what's called arbitrage opportunities, and you leverage technology to go and buy and sell at a very rapid rate, and you make a return on the transaction as a result of the delta.
And so you'd have your NZD,
Yep.
USD, and then you'd have like a NZDS,
Yep.
USDC, for
Yep.
example, and then you'd have NZDS and a BTC, et cetera, et cetera. But if there's differences amongst those, you can basically be instantaneously buying, selling, and clipping the ticket on the way. If there's a
Absolutely.
differential in those markets.
Correct.
So that arbitrage acts as a stabilizer in that entire system as well, doesn't it?
Yeah, absolutely. And it's fascinating because you watch people who start off with maybe $20,000, maintaining a pair somewhere on some sort of exchange, doesn't have to be a big one, and they're into it and they're doing it and they're behaving really well. They're behaving as would a normal Forex services provider.
Yeah.
So it's you don't have to be the biggest.
Yeah.
You do have to have a certain size. But there's opportunities out there. And when I look at it at the moment, there is a generational element to this where they have no fear of taking on these exercises because of what tools can do these days.
Great. Interesting.
What are you picking from the banks? How they how switched on are they with where these things are moving?
Wow. I'll go first. I think the banks are pretty switched on. The challenge they've got is much the same they've always had as we move towards digital worlds, and that is what is the role that they're going to play. There's room in crypto for custody if you do it well. There's room in crypto for things like DeFi type propositions. There's ways to use things like Ripple for the way in which they might displace some of the Swift proposition. So I think that they're thinking about it. I think what they've got to do though is try and eke out as much value as they possibly can under their traditional model. And so what you see is conflicting messaging. Hey, we're pro-Bitcoin, we've bought heaps, versus it's a scam and it's a volatile asset and a bunch of things. So really, we've got at least 5 years worth of them really laying down where they think their big bets are. But the banks that have shifted / are shifting are there, and they're doing very well.
Interesting. Because you don't hear a lot of messaging from these incumbent players, regardless of how big or small they are. You don't hear a lot of it, but behind the scenes, you'd like to think that they're very busy doing something. But the assumption is because you don't hear anything, it feels almost like they're just trying to milk every last little cent they can from the existing, status quo, right? Mm-hmm. But that's not necessarily the case. Am I right? Like they're actually.
So I mean, there's numerous examples. Some of them really close in our region where these banks are leveraging blockchains, which is the technology without the currency, because it has some immense values around immutability and ease of transfer and bypasses SWIFT and all sorts of stuff. So they're already doing that sort of stuff. If you spoke to our regional banks and asked them about Bitcoin, they'd probably be less welcoming, I guess, around that sort of stuff. I got into this space because I really like disruption. Clayton Christensen is a personal hero of mine, and sadly he's gone now. And I look at these banks who are churning out, ANZ nearly $1 billion in 6 months, and they are classically in that period where they are caught. They cannot stop doing what they're doing. Their shareholders are going to demand another $1 billion next quarter, next half. And so what next? And so they're going to classically be caught out in the innovator's trap, right? A low cost platform that they look at and go, it's not good enough, which is kind of Bitcoin or Ethereum, will overtake them eventually, whether it's those or a next iteration. That's just how disruption happens.
So it's like a Kodak sort of moment, right?
Correct. And not just them. Like there is a lot of, you mentioned central banks, but there is 15, 20 papers out there now from central banks looking at digital currencies in some way, shape or form. And China looks like it might be the most aggressive, and I use that in all facets of the world, in doing that. And then, once they go, then what happens? You kind of end up in this big delta, and so it's like a market. Everyone will have to catch up in some way, shape or form. And so, to our worldview, something digital from a central bank will come eventually.
Correct.
Yeah.
Within that 5 to 10 year window. The issue that the central banks have is, unlike us, central banks have to deal with everyone in the country. Yeah. People who want to keep paying cash, or don't even have an FBOS card. That's their customer base as well as fully digital natives. Yeah. And so that is a big challenge for them. And look, I don't know how they're going to solve that. Yeah. With cell phone penetration and all that sort of stuff, it's going to happen, but then again, it'll be a generational change. It will be a generational change. It has to be, because it's not like using Facebook. It's it's sending wealth. It's
one of those frontiers, though, that's yet to be flattened or demolished or disrupted fully. We've seen it in the media, I guess, right, with social media and stuff like that, like the digitization and the democratization of that. But when you democratize the access to wealth in a peer-to-peer way, like what's coming. Like my personal belief is that I think it's possibly going to happen a lot faster, and it'll be the masses that are going to drive it. And I don't think the status quo realizes what's coming down the pike in terms of what's going to flatten them. I hope that's wrong, because that completely destroys my revenue model as well. But that kind of feels like there's so much momentum building here. It's got nothing to do with the price, but everything to do with adoption and the pace of adoption.
Yeah.
Am I being too extreme with that, do you think, or is that?
No, I don't think so. Paul and I have been around technology for a very long time. We've watched the Kodak moment be brought up that many times that it's ridiculous. The challenge that banks have are the obvious ones. They can pull the reins, slow everything down, but then ultimately they get past.
Great.
And they'll get past. They're already being passed when it comes to mobile payments. You look at what WeChat's doing and its efficiency. It's absolutely incredible. Then go a step further and look at the likes of Western Union, where they're trying to step up their game and become a better way of transferring money within their own applications. The way in which Visa, MasterCard are now accepting crypto for payment or stablecoins for payment. So there's a real wake up moment coming, and when you look at the returns of what the banks have got, see at $1 billion or whatever it's going to be, there is potentially an opportunity for them to make more if they can recognise that somebody's wealth includes digital assets. And if you do that, then you start to be a part of the conversation. And if you're not a part of the conversation, then people will find a different facility. If I can borrow out of Japan, who wouldn't? Negative interest rates, and if you can do that using crypto, even better. So there's all sorts of weird questions that need to be answered.
Yeah.
And there's at least a couple of 100,000, we think, New Zealanders who are on the crypto spectrum. We'll use that term, right? So
you make it sound like a disorder.
Well, no, but I mean, there's people. Again, there's people who are, you talk to them and hope they don't, but they hold Dodge or whatever it is, right? They'll hold something, and then there's people who are actively just living and dreaming crypto and trading and moving it around. And I've heard you speak. I know you own or have bought some crypto in the past. Or,
I know nothing about what you're talking about.
Yeah. Now the IRD knows that as well.
Yeah. So there's already
For the record, I lost all mine.
Oh, perfect. Sorry. I'm really sorry to hear that.
We were talking last week about becoming your own bank, and Darcy and I, and a few side discussions around the security of, right, once you're your own bank.
Sure.
So there are some discussions that we had there,
Yep.
and that's actually I see as that's a potential role for traditional banks. So you don't you don't have everything necessarily sitting on this this physical thing, and maybe some of the smarts that they've built up over a very long period of time actually can be applied. But I mean, just imagine today if you were with a bank that didn't have a mobile app and a website, like you'd be gone somewhere else.
Yeah.
And surely this is coming with crypto. It's like which is going to be the first bank in New Zealand that's all in, and if we've already got a couple of 100,000 of a population that are in this space, where are they going to be? Where are they going to be moving if a bank puts up their hands and says we're going to treat those that are using crypto as first-class citizens, and they start serving that audience.
Fortune favors the brave if they're up there.
That's an opportunity, and we saw so many. I mean, I would look at the taxi firms and Uber and think, they could have seen this coming. They could have seen what was coming for quite a long time before, say, Uber launched, and even say the New Zealand market. They could have worked out some way to actually, play, but mostly they've waited so long that the opportunity is a whole lot different. So,
it's an awesome example, right? So, in my opinion, the taxi companies, it didn't matter if it was London or New York or New Zealand. They tried to fight the rise of technology with legislation. And the people I know in the banking sector, and I know quite a few of them, and hey guys. They're largely dependent on their incumbency around, it's you have to be regulated, and but we would say, why? We're on my own bank at the moment, so there is this wake up call coming, So, and again, it doesn't go. It comes with its own risks, as you say, and make sure you've got good OPSEC with your crypto and all that sort of stuff. But would I pay a small amount to someone to manage or take that risk away? If I had enough crypto wealth, absolutely.
Yeah.
There's going to be some people, and there's probably people on this podcast now who are going, hell no, over my dead body, where they're going to get, are you going to KYC me and all that sort of stuff? And it's always part of the crypto ecosystem. But I think for it to grow up and be more mainstream, then more mainstream practices and security need to come with it, I guess is my take on that.
Yeah, so just to extend on that, you have an intersect between digital value and digital identity. And if you can intersect digital value, digital identity, and you've got some level of portability when it comes to your bank account details, the banks have just got to speed up what they do. And if they can speed up what they do, game on. And that's the bit that you just don't see at the moment.
Yeah, they have a role to play. That might be changing,
I mean, we used to work in the telecommunications sector, and when number portability came along, it was the end of the world, because 027 was a Spark thing and 021 was a Vodafone thing, and that was how they kind of locked you into those networks, because your number was your identity. Banks had been saying the same thing, and I just can't get my head around it. Telco didn't collapse. Why can't I port my bank number? Because you try and leave a bank and take all your APs and there's a big barrier to that. And so, you know,
Yeah.
same sort of thing, same sort of parallel.
Fun times. So, just to bring this in for a landing, I want to just clarify something that we kind of started with. You talked about at the beginning. At the moment, it's really, you know, it's available. The NZDs is available to wholesale accredited investors only, $100,000 minimum buy-in. Got it right. But then on Dasset, is it possible for somebody to just jump onto Dasset? And,
Yeah.
So there's a reason we do the 100K limit. It is largely because we're pervasively trying to get it onto more chains and more constituents, so more exchanges globally.
I see.
When you look at Dasset is a great access tool to the retail market. I mean, look at what people are buying. People are buying like sort of $500 worth of NZDs. They're buying 2,800, and they're just sort of experimenting with, you know, what they could do with it over time. Now, what we'll say is really over the next 6 months, you'll see that fill out quite considerably. And people just need to get a handle on what it is and why it is.
And what the use case is, because we're not speculating on the NZDs going to the moon.
No.
It's not that. It's the use case. It's how it fits in with
If it's
your
worth
portfolio.
10% more tomorrow,
Yeah,
we have failed, right?
Yeah, we haven't done our job.
Yeah. No, that's awesome. So if people want to follow you guys and learn a little bit more, what kind of things can you throw at me in terms of, you know, Twitter handles, LinkedIn? What can you give me?
Yeah, so at the moment there's a bunch of avenues. The first one I'd sort of say is in New Zealand, we actually have a global website called Brave New Coin, where most of the advocacy is global, but nonetheless, it's actually a really good place to go and be educated. Check out the local providers. You know, you got DassetX, you got Easy Crypto. Get into what they're doing and see how it works. And when it comes to things like NZDs, so we have a website where all of the information's held. You can see the white paper, you can go through and even look at our portal. You don't have to spend 100K to get into the portal and have a look around. But if you have any...
That's at techament.com.
At techament.com, yeah, absolutely.
And TECHY.
TECHEMYNT.
Just go to the show notes of this episode.
Yeah.
Check the website.
and equally, we're pretty active when it comes to questions.
Sure.
So there's a contact us, get in there. We'll look at more social as we go down the path, but really from our perspective, we want to make sure that Brazil, Turkey, Algeria, they all, you know, can see what this thing is and go, wow, I wish we had that.
Yeah.
And so NZDs is a global gift, not just a New Zealand gift.
That's awesome. Thanks for the gift. That's cool.
You're welcome.
All right, guys.
So, in terms of these discussions, certainly Darcy and I are going to be continuing to talk about this stuff. It is very much where the world is heading. So, for listeners, definitely be checking out New Zealand Everyday Investor podcast if you're not already. New Zealand Tech podcast. I was talk about some of these topics too, but more broadly around the way technology has changed the world, the way we need to move as a country to succeed in that world. But absolutely fantastic to have the discussion. It's great.
Thanks, guys.
Much appreciated for getting us on.
No worries.
If you want to talk more about our world, our crypto sphere, then we'd love to come back.
Cool.
Thank you.
Awesome, guys.
Thank you very much.
All right,
Thanks
cheers.
very much.
All right.
New Zealand Tech Podcast, the voice of the tech community. Proudly supported by Umbrella Connect.